Good morning, everyone, and welcome to our webinar on Indian pharma market performance for the month of Feb 23. First and foremost, let me wish all our team members of the pharma industry a very happy Holi and a happy Women's Day. So with this, we start with our presentation on performance of the Indian pharma industry. Like every time, we have tried to touch a new topic, a different topic this time. And what we will be focusing is, besides looking at the IPM performance, we will also look at certain key events that have influenced the market this month. So first one is we will be looking at the impact of sacubitril and valsartan going off patent, because this combination went off patent in the month of January, somewhere mid-January. And in the Feb data set has started showing the impact of this combination going off patent in terms of pickup and shifts. Then we will look at IPA performance, overall performance, why the high growth for the month of Feb and the growth drivers. We'll look at the top 40 corporates and the top 40 brands. And finally, we'll look at the key takeaways for the month of Feb. So coming to the impact of sacubitril and valsartan going off patent. In fact, if you see, today, as per our Feb data set, almost we are recorded 17 companies which have launched brands in this combination in this market today, and there are close to 21 operating brands in the sacubitril and valsartan combination. Now, if you remember my November webinar, we had discussed that almost 40 companies are entering this market with close to 50 brands. It is possible that 40 companies may have entered the market. However, in terms of secondary liquidation, because our data captures the goods that are being sold from the stockist to the retailer, which essentially means the liquidation of the goods in the market. So probably in terms of secondary liquidation, it may not have started yet. We may capture many more brands in the coming few months. So if you see net, the top brands, the DRL, Sidmus and Vimada, which were the core brands or the brands which started in this sacubitril plus valsartan market, collectively they have more than 45% of the market share. However, if you see the other players in the market which have entered, they also have a significant market share. For example, some companies have really paid some good strategies. Azmarda, which has been taken over by Cipla from JB Chemicals, has close to 5% market share, but Cipla has also its another brand, Ardicor, which it has launched, which has close to 44% market share. In case of Lupin, Sidmus was a brand which was with Lupin till a few months back. Sidmus has gone to DRL, but still, despite the brand going to DRL, Lupin has managed to have close to 8% market share. Now, this is quantity market share. When I talk about quantity, it is absolute number of tablets. So Lupin has managed to have close to 8% market share in this market, essentially meaning that though the Sidmus brand has shifted to DRL, Lupin continued to get prescriptions from its from the doctors that it has built for these set of products. There are also some other players in the market which have managed to have good market share. If you look this company, MSN Labs, it has a smaller company but has close to 5% quantity market share. Arni from Intas has close to 5% market share. There may be some more players in the market which right now may not be captured, but yes, all the new generics or branded generics that have come in the market post this combination going off patent have started gathering a good market share. Now, in terms of pricing, what is the difference? The originators, if you see, we had read news about Azmarda, Sidmus, Novartis, all of them have slashed their prices. However, though their prices have come down by almost 50%, still there is a competition that is there in the market in terms of pricing. So these are the three key strengths that are available for the sacubitril plus valsartan market, sacubitril plus valsartan brands in the market. If you see the MRP per tablet range, it ranges from 7 rupees to 45 rupees. The next combination is 12 rupees to 55 rupees, and the last biggest strength is from 36 rupees to 106 rupees. So the prices have actually come to almost 1/4 or less than 1/4 in many cases. So the market has become quite competitive, and actually this is a very good therapy for chronic heart failure condition. And that's the reason why when we look at the pickup in terms of absolute units. Now what we have done is in this graph, we have plotted the quantity trend and the value trend. Obviously, as the price per tablet comes down significantly, the value of the market came down slightly, but it has gradually picked up now. However, if you look at the average value or average quantity consumption, which was somewhere around 6,000 to 7,000 on a monthly basis, it has moved to around 12,000. Now, this is quantity in thousands. So there will be three more zeros after this. But what I want to say is, if you look at the post-patent loss of sacubitril plus valsartan, the consumption has more than doubled or almost doubled in this market. Essentially meaning that probably it is the newer patients which have got shifted or which have been put on this combination, or earlier ACE inhibitors or ARVs, which were considered as gold standard. A good number of patients can be or may have started shifting. In terms of actual impact of this shift, probably we should give the market another 1 or 2 months to evaluate how the shift from ACE inhibitors is happening over here. Whatever said and done, the strong USPs because of the drugs or this combination going off patent, the strong USPs which are available to the patients today are a strong scientific data on heart failure over and above ACE inhibitors, the better mortality and morbidity rates that this combination shows. It is almost 20% reduction in hospitalization. For chronic heart failure patients, when we talk about hospitalization, the patient literally gets into ICU. So it is the ICU charges, it is the tests, it is the doctor fees, all of them come down by close to 20%. Better quality of life and faster improvement of symptoms. It is one of the four foundational treatments as per heart failure guidelines. Also, this combination has a scope to replace ACE inhibitors and ARVs in heart failure treatment. And probably that's the reason why we are seeing a gradual increase or a good almost doubling of the quantity uptake of this combination. All the drugs prior to sacubitril plus valsartan were not superior to ACE inhibitors, and ACE inhibitors was considered as the gold standard. However, sacubitril plus valsartan is the first drug which is superior to ACE inhibitors. So net ACE inhibitors, which is close to 600 crore market, and the sacubitril plus valsartan, which is today a close to 435 crore market, we will be seeing a significant amount of quantity shifts. Value shift, value of the market, if you see, since the price per tablet comes down to almost 1/4 or lesser, value may not show a significant upside. It may actually come down slightly, but we will see a significant upside in terms of quantity consumption. So this was about, we thought about, giving a slight update on how or what are the market movements we are seeing because of the sacubitril plus valsartan combination going off patent. In the month of February, we could capture some snippets of how the market is behaving. Probably in the month of March and April, we should be in a position to give you a better understanding. Next, we go to the IPM performance. What we have seen is for the month of February, the market has shown a very good and robust growth of 20% and 16% respectively. Actually, it was a very nice and a welcome news that after the Feb growths, Jan 23 growths, the Feb growths were very encouraging. And when we try to look at the growth drivers as well, the growth is a volume driven growth. Now, among the top therapies, we saw two therapies were standing out significantly in terms of growth, which is the anti-infectives and the respiratory therapies. Of course, all other therapies also have grown pretty well. However, what needs to be seen is it a genuine increase in the consumption or is it a correction of the growth same period last year? So what we have done is, this is the MAT value growth across the different across five months. So month of February 19, 20, 21, 22, and 23. So if you see for the month of Feb 22, so this growth is again same period last year. So for the month of Feb 22, the growth of majority of the therapy areas was not so great. So it is basically this correction of the lower growth of Feb 22 which has happened, and which is the reason why we are seeing a robust growth for the month of Feb 23. So it is basically all the therapy areas are following their linear trend lines or seasonal trend lines. So this growth is in line with the long-term trend of majority of the markets. A slight aberration that we see over here is the respiratory category, because last year respiratory category still had shown a 13% growth. And in case of respiratory category, the majority of the places where we are seeing high growth are the asthma segment. Asthma segment, it has shown close to 70% growth. So high growth is more from the asthma segment. Of course, cough and cold have also shown growth, because the winter months are a season for both asthma as well as the cough and cold markets. But then majority of the therapy areas, the growth is more or less a correction of low growth in the Feb 22 months, only respiratory season being an exception. Now, since the top 10 therapies, they contribute to around 90% of the market, we try to look at the linear trend for all the top 10 therapies. We'll go to that afterwards. First, we look at the volume growth drivers. Uh, so at a MAT level, if you see last month, for the month of January, the volume-driven growth was negative, and that was a slight concern. But for the month of February, the volume-driven growth is almost 11.5%. If you see all the three growth levers, price, volume, as well as new introductions, are quite robust for majority of the for the entire IPM. If I were to further break it down for the key therapies for the month of February, okay, for the key therapies for the month of Feb, what we see that barring the anti-diabetes therapy, which is again a phenomena of certain molecules going off patent, barring anti-diabetic therapy, majority of the therapies have shown a robust volume as well as price-driven growth. Here, now we started looking at the linear trend line, because this period, say April 20 to say July, August 21, this period or these 2 years would be COVID influence months. But then it is important to see how the market had behaved before COVID times and how does the long-term linear trend look like. So though I keep on saying that, okay, the for the month of Feb, the growth is double digit and robust. If I were to look at the long-term linear trend line, we are more or less in line with the long-term trends that the market has shown. So in fact, it is slightly lesser or slightly lower than the trend line. So it is not that all of a sudden the demand has increased. In fact, we are back to a normal uptake or normal seasonal uptake pattern for the Indian pharma market. Since the top 10 therapies, they contribute to around 90%, we did the same analysis for the top 10 therapies as well, wherein we have looked at the cardiac therapy. If you look at the cardiac therapy over here, of course, the aberration was the blood thinning agents, which took the market up. But then right now, cardiac therapy is slightly below the linear trend line. Anti-infectives therapy, of course, today anti-infectives therapy, it is the amoxicillin, clavulanic acid combinations, as well as certain hospital anti-infectives which are driving the growth of the market. But if you look at the long-term linear trend line, it is not a high growth. It's a normal demand, which we are seeing in the market as per the long-term trend lines. If I look at the gastro segment as well, it is slightly below the normal linear trend line. The anti-diabetic segment in terms of value is slightly or significantly below. Now, this is a value trend. It may not be true for the unit trend, because this is primarily the value of the market going down, because many of the generics have brought down the value of the products in the gliptin segment, in the SGLT2 segment. Coming to the nutritional segment, there is a slight dip over here. Respiratory segment is a segment which has been continuously above the linear trend line for the last 4 to 5 months. So this is one exceptional segment where I try to study a little more. It is more of the anti-asthma products which have driven the growth of the respiratory segment. Coming to the pain analgesic segment, it is in line with the long-term linear trend line. Even the derma to a great extent is in line. And derma typically follows a seasonal pattern where the winter months are the ones where, the segment picks up, and in the summer season, the segment comes down. Coming to the neuro CNS, in line with the normal trend line, Gynac is exactly on the linear trend line for the last 3 months. So net-net, when we talk about high growth for the market, respiratory is one segment which is slightly above the expectation. But otherwise, all the other therapies, all the other major therapies are in line with the long-term linear trend lines of their respective markets. Then we come to the top 40 corporates and the top 40 brands in the market. Now, obviously, the corporates which we are seeing as high growth, the ones which I have highlighted in green, are the ones where the growth is 20% and above or 30% and above. If you look at the portfolio of these corporates, majority of them are definitely present in the cough and cold segment, in the respiratory segment, or the anti-infective segment, where anyways for the market we have shown high growth. This is true for the top 20 corporates. And if I look at for the next 20 corporates also, if you see Alembic, FDC, Indoco, Laranon, they are present in the markets where the growth of the market or the growth of the therapy has been on a higher side. Coming to the top brands, Augmentin continues to show a good double-digit growth. Obviously, the molecules or the combinations which went into price control, the price of those brands started coming down, or the price of those combinations started coming down. However, Augmentin, because it is a well-known name among the doctors for high-end surgeries or also for areas where we need to take it, the product has become much more affordable, and that's the reason why if you see, despite going in price control, the value and unit growth of Augmentin continues to be high double digit for the past several months. Similarly, if you see some other therapies like other brands like Foracort, Betadine, Calpol, Clavam, Budecort, even they have shown a very good and robust double digit growth. There are certain brands from the gastro segment also like Pan-D, which has shown a very good double-digit growth. Rhizodec from Abbott or the Novo brand also continues to show a very good 83 and 70% growth, almost 83 and 70% growth. If you see, there are certain brands from Cipla from in the asthma segment, which has also shown a good growth. So this was a small and simple, crisp gist of how the market has performed for the month of February 23. If I were to talk about the key takeaways, sacubitril plus valsartan combination going off patent has made chronic heart failure treatment more affordable. The monthly consumption seems to have more than doubled. From an average of 6,000, it has gone to around 12,000. This is indicating that newer patients are being put on this combination, and also there may be some amount of switch because ACE inhibitors were considered to be a gold standard. Now, with this combination, which is considered to be clinically better than ACE inhibitors, probably we will be starting seeing some shift from the traditional therapies to this combination. High growth for the month of February seems to be more of a correction of the low growth same time last year for majority of the therapies. And for most of the therapies, if you look at the long-term linear trends, it is more or less in line with the long-term linear trend, except the respiratory therapy. Volumes have driven the growth for the month of Feb 23, indicating a recovery in pickup. Among the top companies and the top brands, majority of the high growth entities are from the therapies that have shown exceptional growth in the market. So this was all from our side in terms of the growth for the month of February. And I would like to thank all of you for joining us today at 10:30 a.m. in the morning. Have a nice weekend. Have a nice week ahead. Thank you so much.